Podmates, this is Ori, and welcome to episode 1 of OrcaPod, a deep dive into DeFi from the builder's perspective. I'm one of the co-founders of Orca, the most user-friendly DEX on Solana, and I'll be your host. Before we dive in, since this is our first ever episode, I'd like to take a second to introduce the podcast itself. There are a lot of crypto podcasts out there, but there are a few things that we think make OrcaPod pretty special. First of all, as I mentioned, OrcaPod is all about the builder's perspective. So in every episode, we'll bring on a member or a friend of the Orca team to dive deep on a particular aspect of building a DeFi startup. That doesn't mean just development, but also design, marketing, tokenomics, and really everything else in making sure that this ship sails smoothly. Second, we'll keep each episode short and sweet, just 20 to 25 minutes. And finally, given that Orca is built on Solana, we'll have a natural focus on Solana and the Solana ecosystem. So without further ado, I'd like to introduce our first guest, my co-founder, Yutaro Mori.
Hey, all.
So on the surface, I think if you meet Yutaro, he'll just seem like a pretty normal, nice guy, the type who's really easy to grab a beer with. But if you really get to know Yutaro, I think you'll learn that he loves nothing more than really diving deep on a specific topic. And in the past, 2 of these topics were cryptography and finance. So when he discovered cryptocurrency, his fate was sealed. Now he's been really deep in the crypto space since 2017, and he spends his time setting the vision and directing the development of our smart contracts here at Orca. Welcome, Yutaro.
Hey, that was a very kind introduction, Ori.
I do my best to shill you. But yeah, moving on to the core topic of today's podcast, I'm really excited to have you on to talk about another topic that you love to geek out about, which is AMMs. But before we get into that, I'd like to share a little of our story with our listeners, because I think our story of setting up Orca was pretty special. So tell our listeners, what was your path to starting Orca?
Yeah, it's been a fairly long road. I guess one place to start is when I quit my fairly normal tech job back in fall of 2017. That was when the price of Bitcoin was pumping again. And that was the second time I saw that the price of Bitcoin was pumping. And I thought, okay, this time I was fairly convinced that, Bitcoin, or at least some form of crypto, was here to stay. And I essentially just quit my job and spent all my time studying how Bitcoin worked and looking at different consensus protocols. And where I landed actually was Ethereum and not Bitcoin. One of the things that I found pretty interesting about Ethereum was all the development that was going on. And I thought that Ethereum 2.0 was pretty interesting. I thought proof of stake was really interesting. So I essentially started my career contributing to Ethereum 2.0 and helping develop the Ethereum 2.0 client in Go. But I think from there, I actually learned a ton about how essentially blockchains work and how the different consensus protocols work. After, let's say, 6 months, I realized that I had no experience actually developing applications on top of smart contract blockchains like Ethereum. And I found this really awesome opportunity to work at this DeFi protocol called UMA. They're still building great stuff, but that allowed me to have firsthand experience building smart contracts on Ethereum. And I think it's hard to kind of understand how difficult it is to build applications on top of Ethereum unless you've actually done it before. I think a common pattern that I saw, and I think everyone else has experienced, is before going in, you think, okay, there's all these cool things that I want to build on Ethereum. And then when you start actually building it, you realize that the cost to store 32 bytes on Ethereum is like $20. And you really just can't do much on the blockchain. But, even during this time, I kind of felt extremely bullish on the idea of composability, DeFi, and just the ability to build things on a blockchain.
Programmable
money, world computer. Those are all terms that I love
I know you do.
talking about. But yeah, I mean, during that time, we essentially started building side projects together. And initially, the idea wasn't even to build anything crypto related.
Right. It's actually pretty funny to think about. But essentially, we were living in this like same shared co-living space. And we were all essentially quarantined due to COVID. So the story goes. And yeah.
So, I mean, while we started building, though, I'd still been working on prototyping layer 2 solutions. So optimistic rollups, ZK rollups, because it was clear at the time that for Ethereum to really thrive and get to the next level, it needed to increase transaction throughput. And the kind of championed way of increasing scalability on Ethereum, even now to a certain extent, but also at that time, was through layer 2 solutions. So I was really trying to wrap my head around, okay, like how do these layer 2 solutions work? What are the constraints? And what is it going to look like in 12 months or 24 months? So while I was doing that, we had decided to start building things together, right?
Yeah. It was kind of a funny story how it ended up this way, but we actually found this application to this incubator, like the Mozilla Builders incubator, right? And we just for fun, basically, were like, hey, it looks like crypto is one of the topics. We've had a bit of fun building some crypto stuff together. Why not just throw in an application? And so that's kind of how we ended up building Wallaroo. You want to tell them about Wallaroo?
Yeah, so Wallaroo was kind of the application that felt right given our, like individual passions and our interests. And we just wanted to build something on the blockchain that was easily accessible. And we thought, okay, there's already these amazing lending protocols like Aave and Compound. And you could, especially at the time, you could earn something like 8% or even 15% at times just on stables. And obviously, if you have a savings account in America, the interest rate there is like 0.1% or something ridiculous.
Yeah, mine's been dropping more and more.
Exactly. So there's essentially all this, opportunity to earn money on your US dollars in crypto, but it was essentially inaccessible to a ton of people just because it's too foreign, the risks are too unknown, and it's just hard to use.
Right. And the incubator that we were accepted to, the Mozilla Builders incubator, was all about making the internet a better place, which I think is a really inspiring vision. And when they encouraged us to think about our vision, I believe what we came up with was equal economic opportunity for everyone, which is definitely a lofty North Star. But it's something that we still think about now, building Orca.
Yeah, exactly. So, we built the MVP for Wallaroo.
Yeah, 8 weeks.
In 8 weeks. It worked well, but the gas prices continued to go up on Ethereum while we were building it. And I think when we first started building Wallaroo, we tested the transaction and we saw that it would cost something like $3.
Yeah.
And then by the time we launched, which is only 8 weeks later, a single transaction costs like $20.
Yeah.
So that immediately prices out, obviously, anyone that just wants to earn interest on $100. So
DeFi summer, baby.
Yeah, I mean, that essentially kind of like, how are we supposed to enable equal economic opportunity for anyone anywhere when you can't feasibly earn interest on $100?
Right. And that is what led us to Solana.
Yeah, exactly. So that was when, I had already known SBF from his time at Alameda Research. And also I was a big fan of FTX and what he had done there. But then when he announced Project Serum on Solana, I really paid attention to it because it seemed like, at first glance, Solana addresses all of these problems that we were facing with Wallaroo, and then also was kind of a potential solution to all the problems essentially with scalability that Ethereum was facing that, potentially wasn't fully addressed with layer 2 solutions.
Right. But at the time, the infrastructure was definitely not there to build Wallaroo on Solana, right? There weren't even any live lending protocols. And so that's kind of how we ended up building Orca, right? Building an AMM, which I think is a pretty natural segue to the main topic for today. And I'd like to get there by starting to ask you, why exactly are you such a big fan of AMMs?
Yeah, I think the simplest way to explain it is that AMMs are this ideal money Lego that can be used to be plugged into any DeFi ecosystem or really any blockchain ecosystem. So first of all, AMMs allow users to trade one token for another at a good price. But what really makes it special is that everything can happen on chain, as in, when a user wants to trade on an AMM, a single step completes both the execution of the trade, handling the fees that are being paid to the LPs, updating the price for the pool, and then no external or no secondary cleanup instructions are necessary. So what that enables is it allows AMMs to be composed with other applications, whether it be a lending protocol or an aggregator. It can also be used as a really nice oracle, a price oracle for other applications to use as well. And because of its simplicity, I think it also makes it ideal for decentralization, as in it minimizes the control that is necessary for external actors, particularly off-chain, to maintain the system. It's almost like a perpetual motion machine. And I think another thing that's interesting about AMMs is that it's this radically different approach to market making compared to traditional finance. Since if you look at traditional finance, everything is built around order book market making. So even if you look at the industry and the different players in the industry, basically a lot of the players in the industry, whether it be brokers or high frequency traders or even hedge funds, they operate with the assumption that trades are executed on an order book. And it's really interesting that you see the popularity of AMMs on the blockchain, and that it's possible to build an AMM or an AMM-like mechanism on traditional finance, but that would really never take off. So it's I think fairly perplexing, at least on first glance, that AMMs and not order books are the way that markets are being made on the blockchain. So I think that really shows how, I would say, idiosyncratic some of the properties of blockchain development can be.
Would you not say that the fact that AMMs are so prevalent on blockchains is a result of resource constraints on the blockchain?
Yeah, I think that's definitely partially true. I think that's definitely why something like Uniswap v1 gained so much traction on Ethereum. It's precisely because an order book is actually just too expensive to manage unless you put large parts of the logic off-chain. In comparison with Uniswap v1, you can basically put all of the logic on-chain, and it allows people to make markets efficiently.
Yeah, I think you and I are both big fans of the money Lego analogy. And something that I think is so beautiful about the basic AMM is that it really is, say, like a two by four Lego. It fits into everything, and it can be used to build all sorts of structures. And we've really only started to really dip our toes into the water when it comes to that kind of exploration. And I think this leads us naturally to another topic that I'm curious about, which is why a standalone AMM makes sense on Solana specifically.
Yeah. So, when we first started developing Orca on Solana, we got a lot of people asking us, are you building on top of Serum? If not, why not? Because doesn't that fragment liquidity? Our take on this is that it's actually totally fine to have different pools of liquidity making markets. The reason for that is as long as the different pools of liquidity are easily composable, we're eventually going to have an ecosystem where we'll have aggregators on top of the different pools of liquidity, and they'll be able to route orders or even split up orders into the different pools of liquidity to give the best execution for the traders. I think that's definitely going to happen. We've already seen it happen in the Ethereum ecosystem with protocols like 1inch or Matcha.
Matcha, yeah.
Yeah, Matcha. And by having different pools of liquidity that have different mechanisms or even different fee structures, it just allows competition within the ecosystem, which is ultimately going to be beneficial for the traders and the users of the ecosystem.
Right. That makes sense in terms of it not really being an issue for the liquidity to be fragmented, but what's the unique benefit of an AMM on Solana?
So I would say that I think the unique benefit kind of goes back to what I was saying earlier about how it is the ideal money Lego. But I think another way of looking at it is that it has this extremely tight feedback loop between the traders and the liquidity providers, where essentially the liquidity providers are providing a service for traders that are trying to swap from one token to another. In exchange, the traders are giving a fee, and those fees are being used as incentive to have liquidity providers provide liquidity into an AMM. And the more fees are coming in for liquidity providers, the more liquidity will go into the system, which leads to lower slippage for traders. And there's this extremely tight feedback loop between the traders giving fees and liquidity providers providing liquidity. And I think what's really remarkable about AMMs is how tight the feedback loop is, as in most of the value stays within the traders and the LPs, and it doesn't have to go to external, say, protocol providers, whether that be like developers or external capital, for example, VCs. So I find it to be like a very efficient protocol.
Yeah, that efficiency plays really well with Solana in general. And correct me if your understanding is different, but I think when most external folks looking into Solana see it for the first time and they see the promise of such low transaction fees and such high speeds, there's almost some skepticism, like, can this be real? But I guess having been deployed for several months on mainnet beta, it's definitely real. And so, as I mentioned earlier, money Legos really isn't an idea that's fully come to fruition yet, but in the future, I would expect building blocks like Orca, when they can be plugged into more expensive structures at just, a few cents, to be way more powerful.
Yeah, I mean, that's definitely how we see it at Orca. I think Solana did the right thing in identifying transaction throughput as really the key metric to optimize if they wanted a blockchain that could really gain traction. I guess, I don't know exactly what's going on in the founders' minds, but I imagine, they identified transaction throughput as the thing that really matters, 5 years from now or 5 years into the future, if you wanted to build a real blockchain ecosystem. And we kind of have the similar mindset as well. We're just thinking, okay, in 5 years, if Solana has this incredibly vibrant and robust ecosystem, then how are people going to be trading tokens in that future? And we're just trying to build towards that future.
Right. 5 years from now sounds like an eternity in crypto time.
Yeah, I mean, 5 years, it's basically like 1.5 market cycles, though, is another way to look at it. And that's really not that long.
Yeah, that is actually kind of a comforting way to think about it, I suppose.
Mm-hmm.
While we're looking ahead into the future, I'd be curious to pick your brain on how you foresee AMMs evolving over the next year or two. The space is obviously super exciting right now, with a lot of attention on Uniswap v3 and seemingly AMMs for every possible type of stablecoin trading. But where else do you think we're going to go from here as an ecosystem?
I mean, like you said, right now is a really exciting time for AMM development. I think that Uniswap v3 has really opened Pandora's box in terms of AMM development, because they've shown that you can actually build an AMM that can really compete with an order book in terms of giving LPs control over how they provide liquidity. And I think that's really a game changer. But I think what's also interesting is that, if you put different DEX designs on a spectrum, where on one side you have DEXs that are optimized for passive LPs, and that would be obviously like Uniswap v1. And then you put DEXs that are optimized for active LPs, and obviously that would be Uniswap v3 and Serum. You have this huge spectrum of options, and we haven't really explored the middle portions. And I think that what we'll see, especially in Solana, which I believe has kind of more room for growth in terms of smart contract design, just because of how much cheaper it is, we'll just see a lot of different protocols designing their dexes somewhere in the middle spectrum between Uniswap v1 on one side and Uniswap v3 and Serum on the other side.
Yeah, I think we're pretty much on the same page in terms of where we'd like to see exploration happen. But since not everyone is as much of an AMM nerd as you, I wonder if you could clarify what you mean when you say that V1 is for passive LPs and V3 is for active LPs. You said obviously, which I'm going to tease you about a little bit, but it might not be obvious to all of our listeners.
Right. Yeah, of course. So, when I say that Uniswap V1 is optimized for passive LPs, what I mean by that is the standard way for LPs to participate in Uniswap V1 is they just deposit 2 token pairs and then they kind of don't have to think about it. I think that definitely changes once you incorporate yield farming and incredibly volatile pairs, which I guess we do see more often now with things like SushiSwap or even AMM or Uniswap-like dexes on other chains. But in general, as a liquidity provider, you don't have to worry as much about volatility and impermanent loss, especially compared to something like Serum, where you actually have to put your orders on an order book and then shift the orders as the price changes.
That's something that we heard even recently when we were doing market research and user research directly with folks who are liquidity providers for Orca. I talked to one LP who's, I think, pretty sophisticated and actually is a dev in the Solana ecosystem. But his take on V3 was, that's for pro traders. I'm a dev. I'm not a pro trader. I don't see any reason to compete there, and I don't see how I could possibly compete there. So I'm not going to move my liquidity off of V2. And that points to me to a huge opportunity in that Orca is all about serving these underserved needs. And we can be a little idealistic sometimes, but I do love the idea of DeFi making it easier for everyone to participate in these new frontiers of finance and new ways of earning yield, rather than it just being a closed ecosystem for pro traders.
Yeah, so that really speaks to the power of passive LPs. For example, we've definitely heard of crypto institutions, for example, fairly large venture capital firms providing liquidity to Uniswap V1 over, let's say, 1 or 2 years, right? And they're providing, let's say, $10 million, which is a non-trivial amount. But they would never provide that kind of capital to, let's say, something like Serum, because even though they're fairly sophisticated, they don't have the resources to actively manage their position. But if it's on Uniswap V1, then they can essentially just provide liquidity and then not really have to think about it for a while. And it may be a lot less efficient compared to an actively managed position on Serum or Uniswap V3, but it still turned out to be fairly profitable for them.
Yeah. As a passive investor myself, I'd much rather spend my time designing or developing than actively managing my positions. So I love the idea of the space going in that direction. But we'll have to see. I guess we're both really excited to be a part of the new AMM revolution, so to speak. So we'll wait and see how that plays out. But I think you've given our listeners a lot to chew on already. And so I want to close out by asking what you're most excited about in Orca's future.
I'm really excited to see the Solana ecosystem mature and for Orca to mature with it. One way of looking at things is, I mentioned earlier about market cycles. And at least in crypto, historically, market cycles have been 4 years. But another cycle to consider is the software development cycle. And I would say that with Solana, it takes about 12 to 18 months for an idea to turn into a production application. And I kind of see the same thing happening where in the next 12 to 18 months, we'll see new exciting applications on Solana. And I really want Orca to be a core part of all these different applications and to become a useful and efficient protocol.
Yeah, we've been focusing so much on development till now. I'm really excited that we're really ramping up now when it comes to marketing and business development, getting integrated with other protocols. And so, yeah, lots of exciting times ahead. So to our listeners, I just want to say thanks so much for joining us for this first ever episode. As you may know, if you hang around our Telegram or our Discord, we call our Orca community our pod, since a group of whales is known as a pod. So I think that's, first of all, too good of an opportunity to miss naming this podcast OrcaPod. But we also want it to reflect the fact that we make OrcaPod for you. And so please do tell us what you'd like to hear on this podcast. You can give us a shout on Twitter at Orca_SO, or you can find our Discord or Telegram through the links in the show notes. So once again, thanks so much for joining us, and till the next high tide.